In this video, we are going to talk about stock that pay dividends every quarter. So before starting this video, please like this video, and subscribe to our channel for the future updates. Dividend growth over time. Investors understand the value of patience. Even if their yields appear to be mediocre, the best dividend stocks, companies that increase their payouts like clockwork decade after decade, can deliver superior total returns. The yield on an investor's original cost basis is also boosted by regular dividend increases. If you hang in there long enough, the unimpressive 1% return on your initial investment will rise by leaps and bounds. Let's not ignore the power of compounding, as well. As famously stated by Ben Franklin, money generates more money. And the income that money generates more money. Companies with a long history of increasing their annual dividends will also have some comfort. When a company manages to increase its dividend year after year, despite recessions, wars, market crashes, and other challenges, it sends a powerful message about its financial strength and commitment to shareholders. Let's start. Number 10. Realty Income. Realty Income O, $61.74, is a right that can provide consistent income, but it also has another feature that may appeal to some income investors. Realty Income is one of the few monthly dividend stocks on the market. The corporation owns over 6,500 commercial real estate properties that are rented to over 630 tenants in 51 sectors, including Walgreens, WBA, 7-Eleven, Wes, FedEx, FDX, and Dollar General, DG. These are mostly retail companies whose fortunes have changed dramatically as a result of the pandemic. As a result, O's stock has dropped 22% in the last 52 weeks. Regardless, due to the long-term existence of its rentals, Realty Income usually produces stable cash flow. Since 1994, the firm has generated a compound annual dividend growth rate of 4.4%. The company reported a dividend increase to 23.45 cents per share from 23.40 cents per share in December 2020. To date, O has paid a total of 606 consecutive monthly dividends, including 93 consecutive quarterly rises. Number 9. Chubb. In January 2019, Chubb CB, $164.53, was introduced to the dividend aristocrats. In May 2020, the insurance company increased its dividend by 4% to 78 cents per share. Chubb has now increased the dividend for the 27th year in a row. Chubb operates in 54 countries and territories as the world's largest publicly traded property and casualty insurance company. It's not the most interesting subject for dinner talk, but it's a stable company with a long history of dividend payments. With a payout ratio of just 29% of earnings, income investors should expect Chubb to remain among the dividend aristocrats for many years to come. Number 8. Expeditors International of Washington. In January 2020, Expeditors International of Washington, EXPD, $96.92, was introduced to the aristocrats after surpassing a quarter-century of dividend growth. In May, the logistics firm increased its semi-annual dividend from 50 cents to 52 cents per share. The transportation company has had a difficult few years. During the previous presidential administration, trade disputes between the United States and China harmed the business significantly. COVID-19 has now resulted in a decrease in air freight tonnage and ocean container shipments. Throughout it all, EXPD has maintained its semi-annual dividend, which it has increased every year for over a quarter century. With a payout ratio of just 27%, Expeditors should be able to keep its winning streak going and retain its place on a list of the best dividend stocks. Number 7. Essex Property Trust. The pandemic and related recession have taken a toll on Essex Property Trust, $259.33, which was added to the dividend aristocrats a year ago. A real estate investment trust, REIT, that invests in apartments primarily on the West Coast, has seen a flood of renters leave its cities to escape COVID-19. In other cases, tenants have defaulted on their rent. Analysts, who as a group rate the stock at hold, expect to have a weak first half of 2021, as California's strict lockdown policies and onerous business restrictions won't unwind overnight. The REIT went public in 1994 and has been hiking its payout ever since. The most recent increase came in February 2020, when S lifted the quarterly dividend 6.5% to $2.0775 per share. Number 6. Atmos Energy. Atmos Energy ATO, $89.60, which distributes and stores natural gas, was added to the dividend aristocrats in January 2020. The Dallas-headquartered firm serves more than 3 million distribution customers in more than 1,400 communities across 8 states, with a large presence in Texas and Louisiana. Analysts, who are mostly bullish on the name, point to ATO's strong fundamentals and increasing U.S. demand for natural gas. A robust balance sheet and potential for above-average earnings growth also recommend the stock. Indeed, Wall Street forecasts the company to generate average annual earnings growth of 6.6% over the next 3 to 5 years. For dividend stocks in the utility sector, that's okay. Number 5. Caterpillar. Caterpillar, CAT, $197.28. The world's largest maker of heavy construction and mining equipment, was added to the dividend aristocrats in January 2019. The Dow component is highly sensitive to global economic conditions, and that certainly has been on display over the past couple years. Sluggishness overseas, especially in China, has pressured shares, but long-term income investors about getting their cash. CAT has paid a regular dividend without fail since 1933. And in 2020, the company paid dividends of $2.2 billion and repurchased $1.1 billion of Caterpillar common stock. Caterpillar has lifted its payout every year for 26 years, but it hasn't done so since May 2019. If it hikes it again in May 2021, it will extend that streak to 27 straight years. A payout ratio of 75% and 2 consecutive years of declining revenue help explain its tardiness in hiking its dividend these days. Number 4. Albemarle. Albemarle, ALB, $158.69, which manufactures specialty chemicals such as lithium, is slated to raise its dividend again soon. The most recent increase was a 5% increase to 38.5 cents per share in February 2020. With a payout ratio of around 42%, ALB certainly has the financial room to keep building up its dividend going forward, a key aspect of the best dividend stocks. Albemarle's products are completely invisible, but their chemicals are used in a variety of industries, including clean fuel technologies, pharmaceuticals, and fire safety. Number 3. International Business Machines. International Business Machines, IBM, $122.10. A component of the Dow Jones Industrial Average, isn't quite as illustrious as it once was. The company's revenue has been in steady decline for the better part of a decade, hurt by its also-ran status in critical growth areas such as social, mobile, analytics and the cloud infrastructure business. And yet through all its slips and stumbles, Big Blue has been a dividend stalwart. After 25 consecutive years of annual dividend increases, IBM was added to the dividend aristocrats in January 2021. The big news around IBM these days is it's partnering with Palantir, PLTR, on a new solution merging AI, data processing and hybrid cloud for the enterprise. Meanwhile, the company continues to incorporate Red Hat, which it purchased in 2019 for $34 billion in a deal that was the company's largest ever. The partnership aims to help IBM catch up to Microsoft, MSFT, and Amazon.com, AMZN, in the highly profitable cloud services market. Number 2. Nextera Energy. Another newcomer to the aristocrats is Nextera Energy, NE, $83.83. After 25 years of dividend increases, the utility company was added to the elite group of dividend growers in January 2020. Florida Power & Light, FPL, the state's largest electric utility, and Nextera Energy Resources, a major player in wind and solar energy, are the company's 2 main businesses. This combination of a successful regulated utility and a rapidly growing renewables business appeals to analysts. The company should benefit from population growth and the Biden administration's focus on renewable energy generation. Utilities are known for their defensive qualities and consistent, often generous dividends, but NE is one of a few utilities dedicated to multi-decade dividend growth. Number 1. West Pharmaceutical Services. After recording its 25th consecutive year of dividend increases, West Pharmaceutical Services, WST, $289.89, was added to the Dividend Aristocrats in January 2021. In October 2020, the company increased its dividend by 6.3% to 17 cents. WST manufactures packaging components and delivery systems for injectable drugs and other medical products, which is an important part of the healthcare supply chain. The rollout of COVID-19 vaccines, according to Bulls, is boosting demand for the company's products. Meanwhile, the biopharmaceutical industry's strong pipeline should help it grow in the long run. While many of the best dividend stocks have shaky projected growth rates, West Pharmaceutical does not. Analysts polled by S&P Global Market Intelligence expect the business to increase earnings by 19% on an annual basis over the next 3 to 5 years. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.